Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, September 25th, 2012. Well, a continuation of the trend to the downside today. That downtrend was established for the previous day's trading with a small black body candle with a shadow on the bottom, where the market found support down around the 1450 level. Today, a very large black bodied candle continued the trend to the downside, took out the 1450 level in a very bearish manner, but has found some support around the 1440 level, a previous area that in the recent past was resistance, and prior to that was a significant area. Today we've had the sellers close with very strong control of this market, and they've shown very strong commitment throughout the trading day to close the market down towards the low, so a very, very bearish day. If we look at this small congestion area that the market's formed, the market was trending up quite efficiently and then formed this, we had this pullback in the second time frame, something similar to a flag type pattern, not quite correct. The lower boundary isn't quite exact as we'd like, but it is some sort of a congestion area that basically initially formed between the high at 1474 down to around the 1450 level, but today we've had a bearish breakout and a bearish close down below the lower barrier, so that could be significant for this market. So with this being a reversal pattern, the target would be the width of the pattern projected down from the area where the market broke out, and that would give us a target down around the bottom of this minor swing low, basically down at roughly around the 1430 level. We do have some solid support down below there. We do have the Kijun-sen just below the 1440 level, and as we know from the past, the 1440 level is a very important area for this market, so we should watch for some buying to come back into the market around that area. Now, in terms of the Fibonacci extension, here we're looking at very minor trending action. So we've had an uptrend, a downtrend, an uptrend, and really we haven't been able to sustain a downtrend for 2 days in the recent past, except for today, and that could be significant. It could mean that the market may continue trending down. Well, if you look here, the market in those 2 days has extended through the 100% level, and we have tested to the 161.8% and just closed beyond there. So if we see buying coming in, there is a possibility of a change of trend back to the upside. But if we see continued bearishness, then we do have a target at the 261.8% at 1427, which coincides with this swing high here, roughly around the 1427 level. So that will make that a very strong area of potential support if the market does continue trending down. In terms of the Fibonacci retracement, we only have that 1 day uptrend that we've retraced to the downside. We've now expanded down past the 100% level, and the market has tested roughly to the 161.8% at 1439, so we should look to that area for support. Down below there, the 261.8% is at 1422, just below the previous Fibonacci level with the extensions, and just below this swing high, so that makes that area around the 1427 to 1422 a very important and strong area of potential support for this market. Now, in terms of Ichimoku, we have a bullish market now in the 2 higher time frames, in the long term by trading up above the cloud, and in the medium term by trading above the Kijun-sen. But the market is now bearish in the fast term time frame by trading below the Tenkan-sen. And if we look at the price action around there, it's been quite some time since the market was trading below there. A couple of weeks we had quite strong bullishness up above there. The previous 2 of the past 3 trading days, the market found support at the Tenkan-sen, and today the sellers have come in quite strongly to blow away that support there. So it could be quite a very strong change in sentiment in this market, with the sellers attempting to take control in a longer time frame. Certainly they're in control in the fast time frame. Looking at the Kitchensen, however, that has pointed flat, and as we know, quite often the market is attracted back towards a flat Kitchensen, and that's exactly what's happened here over the previous 4 or 5 days over the past week. And that is a potentially a very strong area of support. So the Kitchensen is trading around the 1435 area, just below this 1440 area, and should be a very, very important level, as I've mentioned previously. So just summarising, a market that's still bullish in the higher timeframes. We are seeing short-term weakness. The sellers are in control in terms of the short-term dynamics. We do have some major support just below here where the market's trading and extending down through the 1427 level down to 1422. I'd expect to see some buying coming in around those areas if we don't see it around this level, around the 1440 level. If we do see buying come in, then we do have some decent resistance overhead, probably around the 1450 level where the market tested to in a minor way over the previous couple of days, and then extending up to around the 1466 level and up to the swing high around the 1474 area.